Oh, hi! Welcome to Kunta, our financial accounting presentation. Who are we and what is Kunta? Kunta is a shop that sells all the products that a household needs without plastic. It's a zero-waste shop. We are an environmentally conscious company. Its mission is to lead and encourage responsible production and consumption in Tunisian society. Scientific research has proven that plastic is detrimental to our environment. What makes plastic great is also what makes it extremely dangerous: its durability. Plastic is not biodegradable, neither it is compostable. It simply breaks into smaller pieces and ends up being consumed by smaller animals. When we dispose of plastic objects, we take them out of our sight without really disposing of them. Most plastics end in bodies of water, in rivers and lakes, and eventually into the ocean. Animals cannot make the distinction between food and plastic pieces and end up ingesting unedible things like plastic bags and bottles and even Legos or lighters. As a consequence, these animals die prematurely by suffocation or in other terrible ways linked to the consumption of the deadly material. It is predicted that by 2050, the mass of plastic in the world's oceans will exceed the mass of all the fish that live in it. This is terrible, and we must work together to ban all plastic and stop using it. That's what Kunta is for, and what we are here for. So visit our shop.
It's important for you to know who are the creators. So I will present to you each one of us and his contribution. Mr. Yaoundé, Mr. Zad, Mrs. Lana, Mrs. Diana, Mrs. Viana, and Mrs. Djibouti. We all together created this shop, Kunta. It's a zero-waste shop. And now, I'm gonna tell you each contribution. Mr. Yaoundé and Mr. Zad, they both contributed, each one of them, with 40,000 dinars. Me, Mrs. Lana, and Mrs. Djibouti, we both contributed with the same amount, 50,000 dinars. And finally, for both Mrs. Diana and Mrs. Viana, each one of them contributed with 35,000 dinars.
Hello everyone, after talking about the creation of Kunta and the objective, now let's talk about the main transactions. In the 1st of April 2023, we decided to invest 250,000 dinars in capital shares. And also, we had a $50,000 bank loan, which we are going to pay over 8 years, and that with a principal of 6,250 with an interest rate of 10%. Now let's talk about some other transactions that we see are important for Kunta. First, we have a purchase of flour, pasta, and cereal from a store for a whole amount of 1,600 dinars. Also, we sold a hotel or a lot of merchandises for a whole amount of 4,500 dinars. We invested on a eco-friendly packaging, and so we have a packaging expense of 1,200 dinars. And last, we paid dividend for 1,500 dinars.
Moving to the ledger, here are some examples that we wanted to share with you. For example, the cash. We found the debit balance for the cash as 264,020, and the inventory, we also found the debit balance for it for 2,480, ending with the sales revenue with 40,025. And after posting all the entries, we did the trial balance, and it came out balanced with the total of 394,025 between the debit and the credit. After that, we worked on the adjusted entries, and for sure it came out balanced as well with the total of 357,291.66, and it came out balanced as well because it's trial balanced, and that's what we did.
So now we're going to talk about the income statement. So basically what we have here, we have a total revenue of 13,900 dinars, which is the sales revenue minus the sales discount. We have, of course, the expenses. Cost of goods sold, 7,050 dinars. Rent expense 10,000 dinars. Insurance expense 10,000 dinars, which makes a total operating expense of 49,333 dinars. So the operating income, which is the total revenue minus the total expense, will be negative, which is negative 35,433 dinars. We have, of course, an interest expense of 3,333 dinars, which makes the EBT negative 38,766 dinars. Concerning the other expenses, we don't have the income tax expense, which makes the final net income negative 38,766 dinars. Mariam Hishri, the floor is yours.
At the end of the year, we gathered all information and updated our statement of financial position. We have our current assets that consist cash, inventory, equipment that are of a total of 253,000 dinars. Then we have our non-current assets that are of a total of 45,066.67, which include the vehicle, office supplies, minus their accumulated depreciation. Then we have our current liabilities that are interest payable, short-term notes payable, current maturity, long-term bank loan. With our non-current liability long-term bank loan that are up to the sum of 88,333. Our equity is 250,000 dinars in common stock and a negative sum of 40,266.66 in retained earnings. And finally, the total is balanced from the left to the right and both equal to 298,066.67.
When it comes to the statement of changes in shareholders' equity, our common stock at our beginning balance was of a 250,000 dinars. Our retained earnings, however, at the beginning were 0, but at the end they turned out to be negative, of a sum of 40,266.66 dinars. Our total at the end was of a sum of 209,733.37 dinars, which is not that bad for our first year.
As we told you previously, we sell products. We have different categories of merchandising. We have products made of wood, made of glasses, made of metal. We even have pasta. And so we choose for our inventory scheduling the FIFO method. We're gonna present to you for our FIFO method the different transactions, different purchases and sales that we made, and their cost of goods sold. Our first purchase was the containers. We brought 100 of them at 10 dinar each, which made 1,000 dinars. And then we continued buying until the 1st of July, which we stopped buying and started selling. The first product we sold was pasta. We sold 250 kilograms of pasta for 4 dinars. And our final products sold were the metal utensils. We sold 9 of them at 10 dinar each, which made 900 dinars, and which make our ending balance to 4,550 dinars.
Now moving to the cash flow statement, We have net cash provided by the operating activities that we will be deducing it by the amount of 374,080. After that, we have the net cash provided by the investing activities. For example, we have two outflows here, as the office equipment and the buying of the vehicle, by the amount of 15,000. And net cash provided by financing activities, we have two inflows as bank loans and the issuance shares, minus the outflows of the dividend. We ended up with the amount of 298,000.
After finishing with all the financial statements, let's move to the closing entries. After putting all the accounts in their places, we came out with a balanced closing entry, and that with a balanced income summary, and also the same retained earning amount that we have found in the statement of financial position.
And now we come to the most exciting part, the final step. So after posting all the closing entries, we did the post-closing trial balance. For the debits, we wrote the accounts receivable, cash, inventory, transport equipment, and office equipment. For the credit, accumulated depreciation for the equipment, the interest payable, the retained earning, common stock, long-term bank loan, current maturity bank loan, and the short-term notes payable. And we came out with this balance. 303,000 for the debit, and for the credit, 303,000. It's balanced. Again, it's magic.
If you want some more information, you can contact us through our Facebook, Instagram, and Twitter page, Kunta Shop.